Hey folks, so for this particular video, I wanted to just show you my trading plan and talk a little bit about uh, just about the details of it. I think that every trader should have a specific trading plan that fits your tolerance level, um, but it also should really be the basis of how you enter, how you manage a trade, and how you get out. Um, and you should follow it as close as possible. It's almost like if somebody said, "Here's a manual of how to trade stocks, follow it to the letter, or as close to the letter as you possibly can." That should be your trading plan. If you waver from it too much, you're likely to get in trouble. So I'm going to just kind of scroll up this screen. If you want to read it, pause the video, read it, and I'm just going to kind of go over it, how I kind of approach research, entries, exits, all of that kind of stuff. So the criteria there, well, the very first thing, find a good pattern first. If you've been watching this channel for a little while, you know that I'm using technical chart patterns. So I usually research. I have a huge number of lists inside of my trading program that I'll research when I do a full search for stocks to trade. I do that manually. I don't do any kind of scans, nothing like that. I'm just visually identifying patterns as I go through. Then I'll pull them out, put them in a list, and then I'll take a look at the stock's fundamentals. And for the fundamentals, I use finviz.com. I'll put the stock in, and then if you go down into the table underneath the chart on FinViz, it'll show you earnings and sales in either a green, red, or black number, and that's the growth for the previous year, so it's year over year. And usually, as I've got here, I usually want to see at least 25% earnings per share, 25% sales, and then 15% in the ROE. That's based off of the CanSlim system. They actually say 40%. I dropped it to 25 for myself because I found that being at 40% or higher, you don't really find that many. I mean, those stocks might be great growth stocks and might take off and run forever, but you might not just find that. You might not find very many stocks to actually get into by doing that. So I dropped it down, and I'm even finding now that sometimes even that might not be vital for whether a stock is going to just move technically, the price is going to increase or whatever. So I've kind of played with that a little bit too. For the patterns, I look for something that's 4 weeks or more in size. I might even change that in the future to 3 weeks, just based on what I'm seeing. Some stocks have a lot of momentum. They set up, they take off, and it doesn't even need a 4-week pattern. I try to stay away from bull flags, bear flags, pennants for initial entries into a stock, because I've found over time that they actually fail more often than not, or a stock can get really choppy outside of it. The price still may advance, but as an initial entry, it's not that good. So I try to stick with a bigger pattern. Again, if you want to read these, I don't want to go into too much detail because I don't want the video to be too long. Just pause the video, you can read it. On my entries, I want something to break out with about 150% of its 15-day average volume. So I want an increase, a big increase, 150% or more. Sometimes you get 300, 500, whatever, when it breaks out, and then buying right up the line as it crosses with that level of volume. Obviously, you want good market conditions. Usually, if you got a stock that's running like that, there's another one that's similar that's going to do the same thing, or an entire sector. But generally, that's what you're looking for. That's what I look for anyway. I have there the 10 a.m. rule, and I also have all research must meet the criteria before I enter. I'm playing with that a little bit too, because as I said, I'm playing with the criteria. The 10 a.m. rule I have there not currently used. I don't use it as much anymore unless you're entering into some kind of really choppy market condition. If things get really just uncertain, choppy, you make an entry and it fails, you make another entry and it fails, you might want to back off and say, whoa, what's going on in this market? Breakouts aren't working. Maybe I better use a 10 a.m. rule. The 10 a.m. rule simply means you don't make any trades until 10 a.m. or later in the day. Because if you notice every single day, there can be this big influx of buying from 9:30 until about 9:40, 9:45, even all the way to 10 o'clock. And then in choppy conditions, you'll get something like that, and then the market trend will come in and it just gets all bleh, and everything just disappears. The momentum goes away. It actually happened today. The momentum goes away, everything gets negative, everything gets choppy, everything kind of seems uncertain, breakouts can fail. That's when I would use the 10 a.m. rule. If I start seeing something like that happen, I'm like, whoa, I'm not even going to touch this market until I see what's actually going on after 10 a.m. and things can get messy. So that's when I would use that. If things are really bullish and the market's moving pretty well, I won't even use that. I'll just jump into stuff as it breaks the line. So again, I'm not going to go through all these in great detail, as you can pause and read them. Stops, I'll enter at the line and set about $1. Actually, a $2 stop is what I use now as a default. As the stock begins to move away from the breakout, not necessarily the first day, but maybe the second or third day, if we're getting really good price movement, I'll move that stop to break even, and then I'll sit there. And that way, if it does end up turning over, I get out as flat as I can, or zero, and I just pay the commission for the trade, or you paid nothing or whatever. If it's $2 and the thing the same day breaks out and fails, you lost $2. It's not the end of the world. Ultimately, the winners should be bigger than the losers, so you end up profitable, right? So that's one of your goals too. You got to be willing to take losses. It's a part of the game. You're going to take losses. You have to accept that. And the ultimate goal is that the winners are much bigger than the losers over time, and you take less losers than. It's not even that you take less losers, just that the losers are smaller than the winners. Because you could take 9 losers and have 1 winner and still make money. So sometimes I will enter off a smaller pattern that forms inside of a bigger pattern. I don't really like to do that. I look at that sometimes. Maintenance, this is once I'm in a trade, as I said, I would enter and then set a stop about $2 below. As the price begins to move away, I set the stop to break even, and then I just let it go. If it starts to climb and starts pulling away, great. I don't do anything different until it starts to pull back, which you can usually tell, and that's when I'll go into candlestick pattern charting. You start seeing a spinning top show up, or a doji. After a couple up days, you know it's going to start pulling back. You might get a bull flag or pennant then. I still wouldn't re-enter. That's just the way I'm trading right now. I might start doing that in the future. But then you'll see a bull flag or a pennant form, and then you'll get another breakout from that little pattern, and then I'll move my stop. And at that point, I'll move my stop to about $1 or $2 below the breakout of that little pattern. If the stock continues to climb or we're getting really good action, then I'll move the stop to break even off of the pennant, or break even off of the bull flag for where the entry would have been. And then again, I just let it go. And I ultimately have a bigger target off the large pattern that I'm hoping the stock will reach. And I wait for it to get there, and then I'll think about selling it, or possibly wait for another pattern from there. I'll give you this quote from Jesse Livermore: if the stock and market are acting well, do not be so quick to take a profit. That's part of me just kind of trying to hang back too. I like that quote because it makes a lot of sense. If the market's acting well, you can just sit back, like I said, get to break even, and then you just wait, let the stock do whatever it's going to do up there. It could swing around, it could even come back and get really close to the line, and you don't sell it. Just let it do what it's going to do. If it stops you out, it stops you out. If it keeps climbing, it keeps climbing. For my exits, again, sell a stock immediately if a stop is hit. That's a no-brainer. That is a no negotiation on that. You're out. No matter what. Hit your stop, you're out. Bang. That's how I do that. And then I have this: consider selling when there's a significant profit, stock's still going up, your average gain has been met, or your target has been hit. Average gain, that's a bit more detailed. If you're gonna really keep track of what the heck is going on in your trading, you might want to create a nice big spreadsheet tracking every single trade you make, all the losses, all the gains. Break it all down, do calculations, do average gain, do average loss, all that stuff. I recommend doing that. It'll really help you. At one point, I was not sure what the heck I was even doing until we did that. And then I found out that I was actually making money, except for I wasn't holding my stop, or I was not holding the stop, and the only thing I was losing on was commissions. If I had held the stop, I would have made a whole bunch of money, but I was getting out, and those were fear moves. So that helped me realize I'm acting on fear. I'm not acting on technicals. I'm acting on fear. But the only way I found that out was when I did a nice, big, huge spreadsheet, reviewed every single trade of the past year, I think it was, that I did. And I just really went through and tried to figure out what in the world was going on. I really recommend doing that one. You can look at Mark Minervini's books. He goes into some of that too, and figure out your average gain and things like that. So again, these two tips: selling for a profit is always good, regardless of what is happening in the chart. Selling into strength is better than letting the stock stop you out, which means you have a nice big profit, just take it. You don't got to be right. You don't got to hold it to infinity. Take your money and go. Again, these are just some other tips that I have here. I'll leave it right here, and you guys can read them if you want to. For me, I'm only in one stock at a time right now, as I'm trying to really put this particular plan into action consistently. So that's what I'm doing. I've altered the way that I was trading. I think it was this year, actually, after what we went through last year in October. Some of what I was doing was really not looking at the overall action in the market, and I was just expecting it to do something that it just wasn't doing. And so I ended up taking some damage on my account, basically. So I'm trading one stock at a time, and then I'll just let you read these. You can pause these and read those if you want to. I hope that this helped some people if you go through and read that. If you have any questions for me specifically about a trading plan or what any of this might mean, if you don't understand the way I have it typed out, just put a message in the comments and I'll respond back and help you, or explain it for you if you want. So that's what I use. Yeah, I definitely recommend that you make a trading plan. It's going to help you, and then follow it to a T. See you on the next one.